Hey, welcome to the 40 Finance channel, everybody. It's time once again for a stock portfolio update. This is for my retail stock investment account where I only hold individual stocks. I also have a couple retirement accounts, including one that I feature on this channel that is just ETFs. But for this video, we're going to focus on the retail account with all the individual stocks that you guys hear me talk about. This is the most honest portfolio update in all of YouTube sometimes, I think, because I'm going to show you how the numbers changed, and that at the end of the day, though, while some numbers look bigger than others, the net gain, in my opinion, is mediocre at best. So we'll get into all that on this stock portfolio update. All right, first thing we're going to do is review all my positions, what I bought them at, and where they are today. And then we're going to get into the back end math, if you will, on how the portfolio has actually done performance-wise. We'll go deeper than just the account value, which has actually increased, but that's mostly because of my deposits that I've been putting in. So we'll talk very specifically about the actual ROI on the money that I've put in. All right, but let's take a look at where the holdings stand. I use this Yahoo portfolio tracker only because for video purposes, it kind of illustrates things a little bit better. And in this tracker right now, we're at 109. It says total gain of like 14,000, but this does not take into account some positions that I've sold, both for losses and gains. So we'll get into that later. But mainly what we can see very well here is the performance of each individual holding. Let's look at these holdings in terms of their market value today, AKA the sort of like percentage of my portfolio. PayPal, 253 today. My cost basis at 192. That one is up 33% or so, depending on what day you log in. Next, we got Visa. Visa's been a slow burn in terms of bouncing back from the pandemic, but they'll get there, and I'm not super concerned about them. 224, 189 is what I paid, up about 18% on that one. Next up, we have Etsy, sitting at $207. I'm just below 150, plus 42% on that one. DraftKings, $49. I'm actually surprised DraftKings hasn't went up more on just the momentum of football, but it's at 49 now. I feel pretty good at this price, under $35, and so far that's a plus 43% return. On the Amazon side, this is another what I would say laggard that I think is still trading under a fair valuation. $32.43 today. I'm in just under 3,200. This is the new position that I started this year when Amazon kind of tanked a little bit. And I'm only up 2% on that one, but I'm not super concerned about it. Square at 237. 40 shares at 217.46. And you can see Square up about 10%. I would say Square has a decent risk to the downside, closer to 200, maybe if there's a crash, so I may add more to that. Next up is Magnite, which is a stock I've been buying bits and pieces of quite a bit throughout the year, 5, 10 shares here or there. I'm in at 31, give or take, and actually have lost money on Magnite, minus 8.54%. I do look for Magnite under maybe 28, in the 27s. It really just depends on how big the dip is for the day, and I would anticipate that this will go, somewhere in the neighborhood of 300 shares, depending on the discounts that are available. TJX, this is a long hold that I haven't really fiddled with in a long time. 63.36, 48.08 is what my cost basis is, plus 31%. Taiwan Semiconductor, 109. I'm at 92. It's going to be an interesting year for TSM with all the sort of geopolitical threats, particularly coming from China. That one has me a little nervous because of that, certainly not because of the company itself. All right, Palantir. This is sort of what I say is like a 10-year stock if you're going to get into it. 23.38. I'm balancing at 22.39, barely up about 5%. And Palantir's one that I would likely add more to under $20. I think we'll see plenty of ups and downs in Palantir over the next 2 or 3 years, if not longer. So I'm only looking to buy on significant drawdowns. All right, TAP. We got 46.41 today. This is Molson Coors, 34.58. This is one that I managed my cost basis down by selling some shares that were negative last year. So I now sit at 34.58. It's a pandemic rebound. I'll tell you with TAP, if it got to maybe $60 or so, I would probably consider selling it. I'm up 34% on this batch of cost basis, but I did sell about 100 shares last year. So this return, or I should say I sold 100 shares at a loss last year from a long time ago. And so this return is not actually real. All right, Rocket. I always take a lot of flack for Rocket, and I'm hanging strong. 15.17 today. I'm in just under 20 and down 23%. I think Rocket still has some opportunities. I think it's going to be a longer hold than I thought it was going to be, but I would also consider buying Rocket, in the neighborhood. If it drops, let's just say if it drops under 15, I do start to get interested in just buying a couple more shares for the long haul. The number one mortgage servicer in America, plus all the other opportunities that they're trying to build. I like it for the long term. The housing outlook, though, I think Rocket is just going to be stuck in the mud for a little while. All right, in Zillow, I would say same problem that Rocket's going to have, and that is the housing market outlook, the mortgage outlook. But I love the stock. $89 today. I'm in 30 shares at 91, and that's minus 2% so far. I will happily add more Zillow, hopefully get to 100 shares at some point. But I am being picky because I think that the housing outlook, particularly over winter, is going to be mixed at best, and that news will probably drag Zillow stock down. All right, last couple here. Smile Direct Club, 616. I own 400 shares, actually added to my Smile Direct Club maybe 30, 60 days ago. I'm at 723. Grand total investment of $2,500, or actually it's more than that. It's like $3,000. $2,400 market value. I've lost $400. It also has that wild card syndrome on it of being a highly shorted stock, very similar to Rocket. So a couple wild cards in here on the short standpoint that could pay off randomly one day. If that were to happen, I would certainly consider selling Smile Direct. And lastly, my sole travel play, Sabre, 1135. I'm in at 11, and so plus 3% on that one. I would add more Sabre. It's basically going to be a stock that will go up as the volume of flights go up. So if you watch the news lately, like Southwest Airlines is having problems, they're canceling flights. Any sort of COVID flare-up means canceled flights or lower volume. Sabre's likely to have a rocky road, but over the next maybe 2 years, if we ever get back to normal, this could easily be a $20 stock in the right environment. If it gets to $10 or so, or under 10 for sure, particularly in a correction event, I'd likely add more here. All right, and in order to truly calculate our actual portfolio return for the year, we're going to need to understand my realized gains and losses. So here they are. Sold 275 shares of PaySafe at $8.08. My cost basis was $13.39, and even to this day, I have opportunities to buy PaySafe for below even the amount I sold it for. if I decide to do that later. I also sold 100 shares, which is my entire stake in Bitcoin Trust, Grayscale Bitcoin Trust. That was one where my 1 year capital gains period was well underhand. Decided to take a profit because I knew I had some of these losses and I could balance it out. Minus 35 shares of Unity Software. I sold at 85.36. My cost basis was 116, and I've had some opportunities to buy Unity below 116, but I'm going to wait a little bit and see if Unity can improve a little bit on their revenue projections, because it's not a very strong EPS situation, and they're riding about plus 30% on revenue. It's all good news. I just think the valuation's a little out of whack. All right, next I sold 50 shares of Enphase. I sold at 127, but my cost basis was 181, so whatever that is, a spread of 54 or so. I believe Enphase is still trading under my cost basis. I'm not sure if I had an opportunity to get it back under 127, but I've certainly had multiple opportunities to buy Enphase under $181. But for right now, I'm standing pat because I think solar's getting this huge boost from all the stuff that Biden's working on, and we have yet to see any of that really materialize in sales or notable sales. And supply chain issues and whatnot are dragging solar stocks down as a whole, or not solar stocks, but solar revenue. And I think the stocks are trading ahead of the revenue, in my opinion. I'll look for the right opportunity to get back in solar. All right, and finally, just this last one, 20 shares of a silver play that I did way back in February when we thought there might be a silver rush. Frankly, I was in and out of this one in 3 or 4 days. I think I only lost a couple bucks a share. I got excited for a minute reading about silver, and thank goodness. I realized that it's not a thing I understand, so I bailed on the trade at a loss. However, silver has struggled ever since then. All right, so let's get the full performance. And you have to break out some things in my world if you want an actual performance. You have to have the starting value. This is 2020. 2020, I did almost 40% return on investment, which was phenomenal for me anyway. And I think that 2021, though, the story has changed dramatically. However, I'm still making good pace on my deposits. So to kick off 2021, I was at 82,200. I've managed to deposit almost $35,000. Dividends have been 561. Realized gains and losses. So that last tab we were looking at, the total of all those transactions is minus $2,900. And I've gotten some rebates from Ally Invest because they loan my shares out, some of the ones I don't care about, and I get a couple bucks through that. The subtotal is 114,837.56. My account balance today, though, 112,995. That includes all the stocks that are running both positive and negative, and the amount of cash I have in the account. So the net gain for this year stands right now at minus $1,800, which is about minus 1.6%. So this is the performance of the account in just 2021, year to date, taking into account realized gains and losses, dividends, and deposits. So while the account itself, right, was at 82, I've managed to grow that to 114. A lot of that growth has been deposits. And that's when I say this is an honest stock market portfolio reveal, that's kind of what I'm getting at here. So in terms of the growth of the account and saving money for the long term, this is going just fine. It's exactly where I want it to be. But of course, the net gain on the money, if I were to withdraw everything today, I would have lost almost $2,000 this year. Luckily for me, I'm not withdrawing today, and I expect several of my stocks to continue to go up over the long term. All right, guys, so minus 1.6% today, that could completely change tomorrow, depending on which stocks go up and down, right? The important thing is I feel pretty good about the portfolio for the next 3 to 5 years. I have a couple plays in there that I would sell in the short term, but their number hasn't come up yet. Now, when some of those shorter term plays, I'm thinking of Sabre, Molson Coors is on my list, Smile Direct, even potentially Rocket, although I don't see that one happening. It does have some short interest. If those hit a sell price that I'm interested in, that I think outweighs a longer term price, then I'll be happy to sell. They're all eligible to sell, certainly under a long-term capital gains. They're all over 1 year old, so they've kind of matured, and we'll see where they land. But for now, the focus is really on saving as much money as I can. With children at home, you have to think about college, and even if you don't care as much about college, you still have to think about being able to give them an option after high school graduation, right? Maybe they want to start a business. Maybe they want to get into coding or something like that. And that's part of our plan as parents, is to make sure that the kids don't go out in the world completely empty-handed. We would be able to provide some support to help them get their life journey off to a solid start. So ultimately, those are some of the things that I'm saving for. Not to mention, it's just better than a savings account, right? Because we know what happens in there, and hopefully over 5 to 10 years, the value of that account will give us a sense of security when it comes to paying some of those big life bills that always come up. All right, if you like this video, please give a thumbs up, subscribe to the channel, all the things. Thank you so much for watching. We'll see you on the next video.